You are looking live at the morning show. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. We've got JC Parets. We've got Steve Strazza, chart wizard Alfonso, whipping up charts for us behind the scenes. Hope everyone's day is off to a good start. I'm super pumped up for today because today is the chart report, day one of the chart report, chart summit. What am I saying? Chart summit, 2-day virtual chart summit starts today later on at 4:30 p.m. Eastern time. We'll be going live. We got speakers, we got roundtables, we got discussions, and then of course it'll be all day tomorrow. If you haven't registered by now, I don't know what you're waiting for. The link is in the very, very top of the description below this video on YouTube. It's chartsummit.com. Super easy. Chartsummit.com. Check it out. Sign up. Register. It's free. You got to register. That's the only thing. Do it right now. Do it as the intro is playing. How about that? Do that as I play the intro right now. Just register. It'll take 2 seconds. I promise.
Good morning, Mr. Strazza. How are you?
Whoa.
Strazza's on mute again. Strazza loves.
I'm ready for the big day, JC.
All right. You got enough chewing gum this morning or no?
It's a whole thing.
Is it a thing?
It's a thing.
It's a thing. So anybody as excited as me for Chart Summit 2023? How about that?
Oh man. Yeah. Tonight.
Can I tell the story of the Genesis?
Best ever? Best chart summit ever? Are we breaking records out here this week?
Well, it's kind of not fair because every time we do another chart summit, it's better than the one before. So it's kind of like, some call it trends, right? It's not just asset prices that trend. Chart summit also uptrend. Ready? So here's the sitch. Years ago, this is like 2016, believe it or not. 2016, I'm sitting there. I get invited to this virtual conference. And it's just a bunch of charlatans just shilling their, whatever nonsense newsletter they have with their Lamborghinis. And if I had to hear financial freedom one more time, I was just going to ram my head against the wall. And I'm like, this is terrible. This is the worst thing because I gave my presentation. I didn't really know what I had signed up for. And then I'm just hearing about their Lamborghinis and their financial freedom and all this stuff. And I'm like, this is the worst thing I've ever seen in my life. But this whole virtual conference thing is cool. My friends are way smarter than these clowns. So that was the genesis of Chart Summit. I kind of stole the idea from a group that clearly didn't have any smart friends. and that was the genesis of Chart Summit.
So then when were we live in Breckenridge? Was that 19?
Yeah, February or March of 19. Yeah, that sounds right, because I remember being on my honeymoon and I guess we owed a payment for the hotel or something. Yeah. And they never received it. And I remember Brian Shannon texting me on my honeymoon. Did you pay the hotel?
That's funny.
It isn't funny. And I had, and then we had to resend a new check, whatever. It was a whole thing. So I remember where I was. I was in Greece being these people, can I live? Can I live? Shout out Brian Shannon, who really helped out with that 2019 chart summit. That was a lot of fun, man. Brian Shannon's a way better skier than I am.
So it was a lot of fun. There were a lot of non-chart activities or off the charting activities, right? We were skiing and snowmobiling and stuff. At least you guys were. But it was hilarious. And I don't know if we would ever do it in Breckenridge or anywhere with that altitude again, because some of the speakers were seriously struggling up on stage because some people, that was the highest they've ever been. Their bodies were still adjusting, and they're up there just pounding water bottles trying to get through their presentation.
Spencer, these people were dropping like flies. The first day alone, half the conference was dead. Maybe I'm exaggerating a little bit, but it certainly felt that way. 14,000. What is it? 14,000 feet at the base, 12,000 feet, something like that. A couple miles up.
Wait, is that higher than Denver? Is it about the same?
Yes, bro. It's more than twice as high.
Higher.
Oh, I've never been to Breckenridge. All right, I don't know.
Denver's only 1 mile high.
Get it? Mile
And
High.
yeah,
Isn't
get
that
it.
what they call the stadium?
Oh man.
So
All right.
Denver's 1 mile high, and then Breckenridge is more than twice that.
Oh wow.
It's math,
Okay.
Spencer. It's just math. All right.
It's a thing.
Basic math. All right.
Shall we
Well,
do this? Shall we do? So anyway, that was the genesis of Chart Summit. So for those who don't know the story, that was Breck is 9,600 at the base. That's what it is. But at the peak, it's like you're skiing at like 12 or 13. No, you're skiing up way up there.
I thought it was like 13 or 14 up there.
Feels like 100.
Yeah, it was crazy. So listen, I think we should start talking about the week. Like what's coming in the week.
We will. Let's hit the state of the markets.
credit to you, JC. You were on the virtual event train before everybody else was. Years before everybody else.
No, there were these jokesters with their
All right,
shilling their newsletters first. I stole it from them.
They were first. You were second. All right.
Yeah,
State of the markets.
We actually did it good.
Fine.
All right. This, my friends, is it not the most important chart in the world? I'm just going to leave it right there. You guys tell me. Am I wrong? Am I crazy? How is this not the most important chart in the world? Talk to me, Strazza.
Okay. So I love this. Thanks for throwing it back to me so early on because I do have something to say. I went through and I even asked the chat. I don't know if you saw. I asked the research chat yesterday. I said, what are the most bearish charts right now? Send me the most bearish charts.
Like bearish charts like for shorts or like implications for the market? What does that mean exactly?
You want to tell a scary story. You want to support a bear market thesis. What chart are you starting with?
The 1987 analog, duh.
All right, but come on, we do good work here. So there's a lot of scary tops. There are oversold readings for the first time in 12 months in indexes. There are things we can point to in equity markets. They're certainly scary. The weakest indexes may be breaking down, something like microcaps. The scariest charts are U.S. 10-year yield breaking this range, and
scary for who? Bond owners?
No, growth stock investors, which are most investors, and the dollar. The dollar is also resolving a range right now, and the uptrend there over the past quarter now has just been absolutely relentless. It's up every week. So these were the two intermarket headwinds that we were dealing with when the market was selling off most of 2022. It seems like they're back. Why is no one talking about it?
I don't know. Maybe they're not reading our research.
I think those are the most bearish charts right now. You would have to go to the intermarket because they're just so important. It will be hard for stocks to resume their uptrend if this is a valid range resolution for the dollar and rates. What do you think?
Well, the dollar for sure. As far as rates are concerned, I think it's more of a sector rotation. I think index investors will struggle because those growth stocks and tech, like you mentioned, are going to be under pressure. So it's hard for the indexes to get going with rising rates. I'll give you that. But we've been saying it for months. There's going to be opportunities underneath the surface at the stock level and at the industry group level. And we are seeing that, right? Aren't you the one telling me about uranium every day? Can we go one day without talking about uranium?
If it's only energy and commodity stocks working, most investors are doing very poorly.
Okay, ready? Okay, so first of all, most investors are not our problem. It's also not the CBOE's problem. Why don't you throw that one up there, Mr. Spencer? How do you like me now?
But are we not talking to most investors here every morning, right? Is it not important to discuss these things?
I think that anybody who's watching this show should not be worried about most investors. They should be worried about themselves. Investing is a very selfish endeavor. Energy prices, if they're going higher, that might impact some people negatively. That might increase transportation costs, all of those things. But there's nothing that we can do about it. And by the way, there's nobody here watching the show that can do anything about it either. The only thing you can do is profit from the situation to improve the lives of you and your family. That's all we can do. So I would encourage anybody watching this program to not worry about the average investor because they're not your problem. What other people do with their money, what they choose to spend their money on is their problem.
But I don't know. I think you have to be a little bit more understanding, right? The average investor is
I don't give a shit. I don't give a shit about the average investor or the median investor.
The average investor is going to lean towards more of a set it and forget it investing life.
Right, but whose problem is that? That's their fucking problem. That's not our problem.
No, it's not our problem, but I think we can do a service to discuss it on here and help those people who are still doing that, right?
They're not going to listen. Nobody's going to listen. If they're just set it and forget it, and they're not like, you need to talk to Phil Perlman more often. No one's going to listen, bro. They're going to listen. They're going to do what they want to do.
JC, if nobody's going to listen, why do we show up here and do this every morning?
Because we're having fun. Aren't we doing this for ourselves because we're doing it anyway?
Listen,
right? Might as well. We're having these meetings anyway. Might as well turn the camera on.
Yeah, but you know better than anyone that people are listening. You get the emails. You get a lot of them.
Of course. Yeah, we get great emails. Yeah, some people listen. Good for them. But I can't control whether somebody is shorting CBOE or buying treasury bonds, or, you know what I'm saying? Like, people are going to do what they want to do. Like, so what I would suggest, if you're an investor out there, what the average investor is doing, what the median investor are doing, what your neighbor down the street is doing is not your problem. Like, that's not your responsibility. Your responsibility is to gather the information and make decisions to improve your own portfolio. You can't control what other people are doing.
Why'd you move all my charts?
I didn't move any charts. Can you tell me about the CBOE, though? So listen, my understanding, and I'm not the fundamental guy, far from it, my understanding is that this is a commodities proxy. Do you buy that?
No, it's not, dude. No, it's not.
A volume increasing proxy, maybe
hold on.
Zero days to expiration. Is it just capital markets in general are doing well? Is it more that and has nothing to do with commodities?
You're come on now. I don't have to tell you this. Who told you that this was a commodity proxy? Just overlay it with the commodity.
A couple of clients of ours who are smart. I mean, I'm hearing it. I'm just saying. I don't know. I'm not a fundamental guy. I'm asking the question.
Not at all. You overlay it with Interactive Brokers, it looks almost identical. They are definitely not a commodity proxy. They do very little in terms of commodities.
Good point.
It's just not even close. This is a capital markets proxy. This is where you want to go if you're investing in the broker-dealer space. I'm a little bit concerned when I see this breakout. I see Interactive Brokers. The index still hasn't gone. If you throw up the broker-dealers NYSE index, it's, I think, chart 15. Right? So this is a clear leader, CBOE. Because if you look at XBD, this is one I would put with semiconductors and home builders. Yeah. One of the stronger looking indexes, industrials, tech, can't get it done, right? So CBOE, Interactive, there's a couple names beneath the surface that do look good, but you really want to see the broader space go and support it. We're not getting that.
Because look at the NASDAQ. The NASDAQ's not working. I'm not talking about Qs. I'm talking about NDAQ.
Is that a stock proxy? I mean, what?
No, that's a fair. Listen, again, like I said, I'm asking the question because this is what I'm hearing, and I'm not so sure, right? Clearly, and you're telling me that it's not at all.
I'll tell you, I used to audit these companies. They make money off of two things: the bid-ask spread and volume, right? So volatility and volume. Very simple business.
Well, they're not making any money on the volatility, so clearly it's the volume, right?
Yeah. Trading volumes. Sure.
Yeah. And then this 0 days till expiration is probably not hurting them.
Thank you. So there's a secular tailwind for these companies in the form of our capital market system becoming more advanced and more customers or account owners becoming comfortable with trading things like derivatives and options and 0 DTE, right? It's just an expansion in their business. Think about it. They're just selling more products to their customers. As more people enter non-traditional markets. And that's what's going on. That's where their growth is. And a little bit of overseas. Like I talked about, Interactive is huge in Asia.
Dude, good for them, man. Again, taking advantage of the situation. You think CBOE is worried about what the average investor is doing with their portfolio?
No, but I am. I genuinely.
All right, well, you're welcome to lose sleep over it at night. I'm not going to think about it at all. It has nothing to do with, and by the way, it has nothing to do with empathy or a lack of empathy. Investing is a selfish endeavor. I am trying to improve the value of my portfolio to improve my life and my family's life. That's why we invest. Bad decisions made by other people is not anything that we can worry about. Speaking of worrying about, Mr. Spencer, what do you think Why don't we go through the futures and then any breaking news before we bring on Jared? I've got some questions for Jared. Looking forward to this. I saw Jared for like 2 seconds at the conference from like far away, and I didn't see him again.
I didn't get to say hi to him this year.
Clearly, he was not front row at the Method Man concert because we were.
I wasn't.
You were not. True. I was.
Yeah.
Okay. We got the Dow futures down 150 points. S&P futures down 50 basis points. Same with the NASDAQ 100 futures. Bond futures 30-year up 50 basis points here with interest rates down. Gold and silver both down. Gold, silver, and copper all down exactly 50 basis points. Crude oil down almost 1% this morning with the dollar mixed. Volatility up a little bit with those rates inching down. Dollar slightly down, I suppose, but not much action there. That, my friends, is the Dow, is the futures rundown. Spencer, anything exciting going on here overnight that we need to know about?
No, not. I mean, yes, but nothing like really super exciting. We do have some pre-market movers this morning. A big one is this biotech, which we don't talk about too much on this show, but Immunovant IMVT is up 60% now this morning on a phase 1 study. You don't see that every day where stock goes up 60% for phase 1 results because there's still 2 more phases to go after that. But positive. What?
What are we talking about this?
It's up 60%.
Yeah, it's up 60% this morning.
How big is this
monster
company?
move?
Well,
What?
it's $4 billion.
Yeah, it's $4 billion market cap.
Yeah.
What kind
Are
of
you not
drugs?
entertained?
No, I'm a little bit now.
I'm running through the movers quickly. So
he's doing a hell of a job.
so-
Don't let
so-
him stop you,
so-
Spencer. You
so-
rolling, baby.
I'm asking. This is part of the show. We're figuring it out. What kind of
Yeah.
drugs? Do you know?
Yeah, it's for autoimmune diseases, but it's for a variety of them. So autoimmune is the bucket, and positive phase 1 study trial results. So, talk to me after phase 2. But all right, anyway, 60% this morning. That stock is up. DraftKings is up this morning, catching an upgrade from JP Morgan. Actually, we have that chart handy. JP Morgan had a sell rating on DraftKings about a month and a half ago, and they went up to neutral in early August, and now they're up to overweight this morning. So they've gone from sell to overweight or I guess underweight to overweight in the span of a month and a half, giving it a $37 price target. So this DraftKings is up this morning on that.
All right, guys, we got to talk about this one. Stop there.
Yeah.
We're all sports guys. We got sports friends.
Yep.
All of my friends are doing it. My cousin texted me during the Giants game. She just got into football. She didn't know what a first down was last year. She sent me a screenshot of her prop bets because DraftKings given her free bets or something. All my friends are doing. I don't have a DraftKings account. I would get involved if the Hard Rock ever figures it out.
Spencer.
What?
You see how dumb people are and why we don't care about what the average investor's doing?
I want to know.
Gambling on sports. It feels that way to me. It genuinely feels that way to me. They have made this very accessible and convenient to do. They're advertising lines and over-unders on ESPN every 5 minutes. It's right in front of everyone's faces. I think this space is going to be absolutely.
But God forbid an investor that's not accredited invest in a private company. God forbid.
I was talking to my cousin last night. I have no idea if this is true. This is just what he told me.
Yeah.
Actually, there's no way it's true. He said that some ungodly number was bet on the Jets to win the Super Bowl, and that's all now profits for the sports bettors because the Jets are not
too far out of the money on that one.
Yeah. Like I don't know what he said. He said like 500. But he said some ridiculous number. There's no way that's true. But anyway,
I'll sell those all day.
Yeah.
Who wants to buy them? I'll sell them.
Okay, real quick before we bring on Jared, a couple more. Manchester United, there's a billionaire reworking his bid for that for the team there, so that's up on that news. And then United,
So Man U is still public. There's no solid deal on the table.
No, but there's interest. And then UNFI, United Natural Foods, had earnings. They had a very tough quarter. They actually were not profitable on an adjusted EPS basis. and they talked a lot about headwinds for the quarter and headwinds going forward. The guidance was weak, so UNFI down about, what is it, 10% now? Oh, no, 19% now. Excuse me.
They just make packaged foods.
They are the ones that provide foods to the grocery stores.
Okay. Hey, did we ever follow up on Twinkie Hostess? Did we ever do that? We talked about it when they were exploring a sale. I don't know if we ever talked about the deal.
What a beast! Here, let me just throw that up.
Maybe we didn't. We have the chart here somewhere.
It's in the deck. So JM Smucker, they're the big peanut butter and jelly guys. I got a chart in here. What do we have to use?
I got the Twinkie. Go for it. I got it. Slide 1.
God damn it!
Make up your mind.
You could use slide 1. It hit our target though. You could show that on 45.
Okay.
Yeah, great. So you don't really often see it happen that fast, right? They announced that they were exploring the sale, and like a week or two later, it was done. So good for them.
So who bought them?
JM Smucker. SJM.
Oh, yeah. Peanut butter jelly time.
Which they're a decent sized company, 13 billion, and
they're huge for a food company.
Hostess is wow. I mean, that's a big acquisition.
How big was Hostess?
5.
$4.5 billion. Man, making people fat is good business, man.
Dude, and if you look at their products, it's like Twinkies and a bunch of like bizarre stuff. This company's worth $5 billion.
Strazza, are you also worried about what the average American is eating? Is that also something you're concerned with?
No, because I can't help with that. But Perlman is, right? And that makes sense because he has expertise in that field. That's his
I'm pretty sure Perlman's not concerned about what the average American is eating.
Right.
He's concerned about what his a group of friends, you and me included, and Spencer for that matter, right, are eating. But the average American, you think Phil gives a shit? Come on.
Perlman has a heart. He's got a big heart. I don't know what happened here.
Yeah, he also has a bigger brain, too.
Can I bring on Jared?
Please.
Please do.
Please.
We got
I care
Jared.
what Jared is doing. I care.
We got Jared Dillian here, editor
Jared
of
Dillian, not the average investor.
Editor of the Daily Dirtnap. If you don't subscribe to that, you should. The link is in the description. Here we go.
Everybody's doing the.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jared.
Hey, how you doing?
What's up, my man? How are you?
Can you hear me?
I can, loud and clear.
Okay, good.
Hi, Jared.
I saw you for like 2 seconds in California from far away, and then I missed you the rest of the time.
I was looking for you. I never saw you. Sorry. Yeah.
You underestimate my sneakiness.
That's a good Mr. Deeds quote right there.
You like that one. You like that one. Only the smart ones know, Jared, you know?
Do you live over there, Jared? Or are you making the trek out there every year like we are?
I live in South Carolina, so I make the trek.
Yep.
So before we get into the markets, something I really admire about you, you do a lot of writing, huh?
Yeah, I do a lot. So my 4th book is coming out in January. It's called No Worries, How to Live a Stress-Free Financial Life. It's a personal finance book. So that's my 4th book. My 3rd book just came out in April called Those Bastards. I got books 5 and 6 pretty much ready to go. I got my Substack, which you can subscribe to, called We're Gonna Get Those Bastards. So yeah, I do a lot of writing, plus the newsletter.
A lot of times you'll see people in our industry write a book or two, but to just keep going, you must really love it. You're going for 6 here.
Yeah.
Good.
What's the best?
Congratulations, by the way. I mean,
it's not
writing a book is hard. I've been writing a book for 10 years, so it's not easy. So you're talking about 5th and 6th. Talk about showing me up.
People asked JC to write a book. Actually, the woman at the booth was asking about you at Future Proof. I was like, you got to talk to JC. People asked JC to write a book. He goes, it's already written. Just put the blog post together.
Well, that's Morgan Housel. That's the Morgan Housel strategy. He sold I don't know, a zillion books. All it is a bunch of blog posts, and it's fantastic, by the way. I'm not hating on him. He's publicly talked about how, he was trying to write this whole book and he was struggling. And then when he realized that he just needed to get back to his roots and just turn them into blog posts, he flew right through the book and now it's a bestseller.
Did you see the woman at Future Proof? They must be pretty excited at the publisher there. She had Morgan Housel earrings on. Did you guys see
Morgan
that?
Housel earrings?
She had mini books of his book.
Yeah, that was Sally. That was Sally.
Earrings.
Harriman House.
Wearing
Yeah.
his book.
That's ridiculous. That is ridiculous. Jared, I got a couple questions for you, but before we get into that quickly, just what are your thoughts over here in the market? Let me just throw it out to you. I'm not going to ask you any specific questions. Like, what are you thinking about?
Well, I'm really focused on fixed income these days. I'm focused on rates. One of the things about having a newsletter, the Daily Dirtnap, is that, I have a little over 4,000 subscribers, and I get a lot of anecdotal information about the economy from people. And the message that I'm hearing from people over and over again is that the economy is slowing. So just a couple examples, like I have a subscriber that's a cosmetic dentist. He said his business went to zero. I have a subscriber who is an auto parts.
Sorry, excuse my ignorance, Jared. What is a cosmetic dentist?
They fix them, make them look better, right?
Yeah, it's like it's purely elective procedures. It's not medical, it's elective. So it's more cyclical.
Is it like braces?
No, that's orthodontist. No.
Got it. See how much I know about medicine?
A lot of dental stuff as you get older is elective. I'm fine.
Got it. Okay. So
the point is, I'm hearing from a lot of people these anecdotes that things are slowing down pretty rapidly. And if you look at the data, sort of ex payrolls and ex CPI, I mean, things are slowing markedly. And this feels to me a lot like 06 and 07. I was at Lehman in 06 and 07. And we were seeing the data get worse and worse. And back then, people were focused on the ABX, which was a subprime index. And it didn't matter until one day it mattered. It was like February 27th, 2007. And that's when people started to focus on the housing issue. And even then, after that, the stock market still had a ways to go higher. And it really didn't matter until the summer of 2007. So there was this period of a year or more where things were getting worse and worse and worse, and it just didn't matter. So, I'm looking at Philly Fed is a disaster today. Dallas Fed was a disaster yesterday. We have a whole bunch of data today. We got new home sales and consumer confidence.
Jared, can you tell me what makes them disasters?
I mean, like trending lower over a period of months and coming in below expectations. Like, even if you look at a chart of payrolls, like a 12-month moving average, it's been trending lower for the last 12 months. And what's happening is that the yield curve inverted 15, 16 months ago. And typically when the curve inverts, you get a recession within 18 months. And we haven't gotten it because we still have trillions of dollars from the stimulus sloshing around the economy. And it's sort of delayed this recession that we were supposed to get, but we haven't gotten yet.
And would you say that if you took that one step further, that's when maybe, things will start to fall for real estate? Like the job market has to go first, then you'll see it in real estate. Everybody's talking about how real estate is so resilient. Isn't that because everybody still has jobs?
No, real estate is resilient because there's no supply. And the reason there's no supply is because a lot of people have 2.5%, 3% mortgages and they don't want to move,
They can't because then they're going to buy a more expensive house at a higher rate.
Yeah.
But think the next step. I get that. There's no supply right now. When people stop getting paid, their houses are going to come on the market. There's going to be supply.
For sure. Yeah.
People always say a black swan is something that you don't see coming, but you talk about the financial crisis and the subprime thing. Like it was very well advertised. It just all of a sudden we woke up one day and it mattered. Could we be?
Well, it wasn't just in one day.
Right. Like people understood that risk on Wall Street. Is that fair to say?
Yeah, I mean, it was
Lehman Brothers clearly didn't estimate it properly, right, Jared? I mean,
yeah, I was there. Yeah.
Leverage 50-1, and if anybody knew all of the things that you say everybody knows, it was Lehman Brothers. They were still leveraged 50-1 and blew themselves up. So you can know all you want, right?
Yeah.
What do you think the big risks are today, Jared?
I think the biggest risk, when I look at the price action of treasuries, I mean, the price action is a 1 out of 10. It's a disaster. Like yesterday was one of the ugliest days I've ever seen in the bond market. And I really, bonds have blown through all of my technical levels. And I'm kind of worried that we are going to get a parabolic move higher in rates. that is going to really just shake everybody out. And when I say parabolic, I mean, 10s are at 4.5 right now. You could get a move to 5 or 5.25 or something like that. And it's almost like a crash in bonds. That's the thing that kind of keeps me up at night right now. So it's just the price action is so ugly.
So what happens in that environment? Banks blow up, and maybe it still doesn't matter, but what else?
Banks should. I'm actually surprised we haven't had any bank failures since SVB. I mean, if you talk to any community bankers or people who work at regional banks, the one thing they are obsessively focused on is net interest margin. The yield curve is inverted. Their NIM is just like compressed. And I would have thought we would have had 10 or 20 bank failures since SVB, and we haven't. I still think that's coming. If you remember, when SVB did fail, you had like a 9 standard deviation move in 2-year yields. So I do think there's some asymmetry around yields, but I don't know.
So what is it? A 9 standard deviation? How many sigmas is that? So a move that should happen, once every like billion years, but we see something like that all the time. So it's almost like markets are not efficient after all, right?
That is absolutely correct. Yeah.
So if rates do make some sort of like melt up move higher, like you're talking about as a possibility, is that worse for speculative growth or tech stocks, or is it worse for the banks, regional banks in particular?
Man, I think it's worse. I think it's terrible for both.
I was going to say, it's got to be both, right?
Yeah.
But people are used to, from an intermarket perspective, it's like common knowledge among technicians that higher rates are good for banks. Right now, higher rates are a disaster for regional banks. And I don't think a lot of people are picking up on that.
Yeah. I mean, somebody's asking in the chat, how am I positioned? Okay. So I have a pretty large position in 2-year note futures. I'm bullish on duration.
Which futures are those?
Twos.
Oh, twos. Sorry.
Yeah. And the way I look at this is that the Fed, absent a pickup in the data or inflation or anything like that, the Fed has pretty much indicated that they're done. We may get one more rate hike, maybe not. So, you're not really worried about the ups. And if you look at the price action in the bond market over the last couple of weeks, the whole move has been in the long end. Like twos have been, just pretty much unched the entire time. So I think that the Fed is ultimately, I think we do go into recession. I think the Fed cuts 200 to 300 basis points, and that's how that bet pays off.
When, next year?
Probably early next year. Yeah.
And then, okay, so if we get this ripper in yields and bonds completely collapse in the equities market, does energy do well there?
It probably does better than a lot of other things. Yeah.
But on an absolute basis, doesn't necessarily have to go higher?
It does not, no.
But on a relative basis, you'd argue energy would outperform. Yeah. But on an absolute basis, it doesn't mean it's going to go higher. It could, but doesn't necessarily. It's not a lock.
Yeah.
And is copper's lack of participation here when it comes to the commodity story, the fact that copper's just kind of, been churning around and not making anywhere near new highs, like crude oil highest levels of the year. Does that fit with, kind of makes sense with exactly what you're saying, no?
Yeah, I mean, it's funny. I pulled up a chart of Alcoa last night to take a look at it, and Alcoa is down like 60% from the highs.
Yep.
They say copper has a PhD in economics, and, I would say aluminum has a master's in economics. And
I like that.
So, look, I think the metals probably in 2024, once the Fed starts cutting, I think the metals are going to do really, really well. But what copper and aluminum are telling you right now is that we are headed into a recession. If you see Alcoa down 60% from the highs, that's what that means. So
let me ask you something, Jared. I mean, speaking of which, with real yields doing what they're doing, and the US dollar ripping as well for that matter, are you impressed with the resiliency of gold and silver in this environment?
Yeah, I mean, that's one narrative that's developing. Gold has been disappointing for sure, but really it's only down from the all-time highs. It's only down about 7%. And, real yields are close to 3% right now.
Yeah.
And gold is hanging in there pretty well. So, I mean, it's down this morning. It was down yesterday, but it's actually, the way I look at that is if the Fed cuts, you probably get a really high velocity move to the upside, because it's showing this relative strength.
Yeah, I mean, if I would have told you that the dollar over the last 2.5 months would be doing this and real yields would be doing that, you would have said gold and silver are getting murdered?
Yeah,
Destroyed?
down 20% for sure.
Right?
Yeah.
But it's not. Like,
Yeah.
so to me, when it comes to these intermarket, sort of relationships, for me, it stands out when the market is not doing what it should be doing, right? That's what catches my attention. No? I got a bone to pick with you. July the 4th, on Independence Day, instead of pounding beers and eating hot dogs, your tweet, Jared, anyone want to read a thread on why the CMT is as dumb as the CFA, or should I just shut my pie hole? Why are you hating, bro?
Well, I ultimately I didn't do that thread, so you can't say anything about it. So actually, so when I used to write for Bloomberg.
The CMT is very valuable.
I used to write for Bloomberg, and I did a piece in August of 21 about how the CFA was a waste of time, and that piece went totally bananas. It went totally viral. Let me tell you, it's not really a beef with the CMT. I use technical analysis.
Clearly.
Yeah, I use technical analysis, but I think some people use it incorrectly, and I think that the way that it's taught in the CMT curriculum also might lead people to believe that it's taught incorrectly.
I would agree with that.
So I think that the CMT is focused really on trend following. Okay. And I think a lot of technicians are focused on trend following. So I see tweets from people like, okay, XYZ stock, it broke the 50-day to the downside. It broke the 200-day to the downside. It broke this trend line. Now it's time to sell. And I'm like, no, the time to sell was 6 weeks ago when it was on the highs. Like, if you wait until it breaks all these supports to sell, it's actually probably time to buy. You know what I mean? So my philosophy with technical analysis, I'm more of a mean reversion guy. And, it's a matter of personal preference, and that works for me. But, it's pretty rare that, I don't want to say rare, but I think it's rare that you might see a stock or a commodity that blows through trend lines and resistance and then continues to trend for a long period of time.
Well, I'll tell you what, it's funny because my beef with the CMT is that I think it's the opposite of what you're saying. To me, the curriculum focuses way too much on mean reversion and not enough on trend following, which is hilarious. But I will say, listen, for me, once you're done with the CMT, which I did, I think like 16 years ago, I finished mine. That's when your learning begins, right? So for me, the CMT is just a body of knowledge. It's like, okay, here's everything. And then your journey begins, is really how I look at it. I know that's how, when I finished my CMT, I thought I was, Paul Tudor Jones. And clearly I was anything but. Especially I had a good year in 2008, the year that I finished my CMT. So I really thought that I was a hero, right? We had a really good year in 2008. So that's how I look at it. But the bigger thing about the CMT is the community, right? You can't argue that. I know a lot of CMTs. The community itself is really worth the price of admission alone, right?
That's cool. That's cool. Actually, I just finished a degree. I got a master's in fine arts and creative writing.
That's cool. From where?
So are you guys listening about, continuing your education, continuing to learn? But before I on that, before you run, Jared, can you talk to people about the value that you get from writing about the markets in particular, from writing, about putting your ideas down on paper, forces you to think through things, the feedback you get from readers. Correct me if I'm wrong, it's got to make you a better investor. No?
Oh my God, yeah. And I may not do the newsletter forever. I've been doing it for 15 years, and I probably won't do it for another 15 years. But let's say I quit the newsletter and I start a CTA or something like that. I am still going to write every day, because it helps crystallize your thoughts. like without writing, you're totally lost. And you still do have to send out your thoughts to 20 or 30 people and get feedback and stuff like that. It's totally part of my process and it makes me better. If I wasn't doing it, I would totally be lost. So
you hearing this, folks? You hearing this? This is, I could not agree more. I know I kind of threw you an alley-oop there. I kind of knew what your answer was going to be because I know the benefits of writing and putting ideas down on paper, getting the feedback, going back and forth. Finally, from a sentiment standpoint, Jared, you tend to have a lot of opinions on where sentiment sort of lies in the market, where it might be a little more extreme. I've noticed you've tend to be right in the past on that. How do you aggregate that sentiment? Any tips?
So the thing about sentiment is that you get it from all different kinds of places. Like a great place to get it is Twitter, but Twitter isn't the only source of sentiment. You know, the thing about living in Myrtle Beach is I'm not surrounded by a bunch of finance dicks. I'm surrounded by real estate appraisers and waiters and waitresses. And, you know, as I walk around town, I talk to a lot of different people and I get, you know, I can get an opinion on the stock market from a real estate appraiser, which is a lot more valuable than Mike Wilson's opinion. You know what I mean? So it really, like living here and getting that sort of on the ground, like middle class sentiment is super, super valuable. But also Twitter, like it's, you know, I have always said if I had to give up either Bloomberg or Twitter, I would give up Bloomberg. I would literally just trade with Twitter. It's that valuable.
Yeah, I agree 100%. Jared, you're the man, dude. This is fantastic.
Thanks, Jared.
Spencer, bring him back soon. This is great.
Do I need to leave here? Or?
No, I'll do that. I got you. I got you guys. Order received. Thanks a lot, Jared.
Thank you, bro. Appreciate it. That was great.
You know, that was interesting what he said because he said he lives in Myrtle Beach. I live in a beach community too, and have a lot of conversations with the locals here. And I always kind of throw that sentiment information out. Like, this is just too unique of a place. This is, you know what I mean? I kind of just toss it out.
Is
that right?
Chiropractor? You know, I don't know. You bring it up sometimes.
I do, but I try not to overthink it. I don't know.
He brings up a good point. You know, it's the non-stock market people.
I just got to take this one because this is so bad. T-Money. With all due respect, you couldn't be more wrong. Banks.
What did T-Money say?
Not true, Strazza. Banks are fine with higher rates. The problem was deposit runs. Banks are designed to give people their money back. They should be able to let people deposit their cash. When people are running to the bank and you have some sort of bank run situation, and then you have balance sheet issues on top of it, they're not able to fulfill those obligations. That's what was happening. So maybe, yes, it was a combination of the two. It was the runs that pushed them over, but it was the balance sheet issues that made them vulnerable in the first place. They should be able to withstand some deposits or withdrawals.
Or just the concentrated deposit base in the first place.
That was more of a unique thing. That's why they went first, but more.
Yeah. Okay. All right. Hey, it's 9:15. We're actually on time for once. Should we bring on Kimmy?
Yeah.
I know what the chat wants. Every day the chat's like banging on the door. Like, we want Kimmy. So, okay. You know, your lips to my ears. Here we go. Kimmy Sokoloff. She's here. Let's see what she's trading today.
Hey guys.
What's up, Kimmy?
Sokoloff, 3 for 4. Killing it again. Killing them.
I should have hung on to that DE. Actually did go up to like 385, so my bad.
There she is, making money and complaining along the way. Right, Kimmy?
Yes.
That's how to do it. Listen, nice job yesterday. Long Russell 2000 for a profit, SPY for a profit, Tesla for a profit. And then, as you mentioned, the deer, you would have held on to it. That would have been a profit too, but all good. 3 for 4. Not bad.
IWM and the SPYs, I bought pre-market. They dipped a little lower, and then they finally had a nice little bounce yesterday. And now that bounce has been negated, and we're back at kind of like yesterday's lows. Well, the IWMs are. The SPYs, I don't think so just yet. So we'll see. This is dicey market. So I just tell everybody yesterday, like, if you caught the SPYs, the IWMs, I also recommended the Qs. They could have taken that versus the other two indices, ETFs, sorry. So
a lot of strength yesterday out of the Dow Jones Transportation Average, led by FedEx, and FedEx is on the radar today. Walk me through that.
yeah, yesterday it popped to I believe Thursday's high at is it two? It's in the twos, right? I was careful. Is it 200 or 300 levels? All
You
these
and me are the
stocks.
same. The y-axis is the worst.
I
Yep.
I also
keep
don't
up
know
anymore.
price.
So yesterday it popped to the other days. I believe it was Thursday's resistance at like 268.30 or so. So now we really got to see if it's going to push through or not. Listen, this market is dicey in here. Moderna is gapping up, which actually I put a trigger on around 99, but it is gapping up. So, we'll see how that acts. We'll see if anything gets momentum today. We're pushing lower. This is, market's just not ready to go yet. We'll see if FedEx pushes through or not. It's kind of like a give or take. Let's see. MSTR. That's
Hold on one
probably
second. Back up there for 1 second. Throw Moderna slide 1 there. I want to know what you're thinking here, because it's holding below support. And then today still right below 99.
Mhm.
It's it's hanging on there for dear life, Kimmy. No.
Yeah. I sometimes look for dead cat bounces, so we'll see.
not just sometimes. I mean, you do. As a one of the things that I really admire about you, and I mean, even if I hated you as a beautiful, which I don't obviously, but as a compliment to what we're doing, trying mostly trend following, the mean reversion strategy shorter term is such a beautiful compliment to not only what I'm doing, but a lot of investors out there, that aren't looking shorter term, that aren't looking for those mean reversions. So I think this is exactly what you should be doing, because clearly it's working. So I like that.
Yeah, thank you. Bottom fishing. Someone in the room asked me about XBI. No. The biotech ETF.
IBB.
What?
IBB or XBI? They're both.
Yeah,
Yeah.
XBI is the equally weighted,
Right.
IBB is cap weighted.
Yes. XBI. Listen, you're bottom fishing, right? So you got to, it's down at the lows. I don't really trade biotech stocks that much, but you're trading at the lows, you bottom fish. You see if it holds on to the previous day low. If it doesn't, then it's going to make a lower low and get out. That's it. Get out. Just step aside. Yesterday, we caught a couple nice moves in the room. I said, listen, guys, if you caught one of the trades, two of the trades, be content. This market is a little dicey here. Look, this morning we're back near yesterday's opening print, so it's, I think you just have to be very careful right now till we start to base, we could head another leg lower. VLO. I trade VLO a lot. So,
what are your thoughts here on the VLO?
It is like flagging. It looks great. I do take a lot of counter trend trades in VLO. But it's flagging, it's holding on nice. I think it hit 152 last week. It looks like a potential, if it hangs on in here roughly, looks like it could trend even higher. That stock overall does look well.
Throw slide 1 there, Spencer, so the folks can see this thing. This thing's an absolute beast.
Oh yeah, it's
Valero, big refiner, just making new all-time highs.
Yeah, this 150 area really pushes through. I mean, I know it went above it, but pull back in, really pushes through. Might really get going,
I mean, how many stocks do you know that are making all-time highs right now, even in energy? Not many.
Not many. I'm shocked XOM didn't even hit a high. That was struggle. Hess was one I was in like all year.
Right.
That one made a continued high. Not right now, but it continually made a high. ExxonMobil, no. CVX, no. I think MPC did, but I think that one did. Marathon. But it's tough. So today starts Chart Summit, right?
Hell yeah, Kimmy.
Are you dressing up? Do we have to dress up tomorrow?
Look,
I'm wearing. I brought my tuxedo, black tie optional, Kimmy.
Do I have to put a little nice shirt on?
Me and Spencer are dressing like Lloyd Christmas and Harry Dunn.
I'm wearing a collared shirt today.
I think I'll wear a little button down tomorrow. JC, you're staying like that?
I'm going to be back this afternoon. I have to take my son to get a haircut because my wife took him to get his first haircut yesterday, and he literally looks like Lloyd Christmas. It looks like they got a bull and gave him the thing. He looks absolutely ridiculous, and I will not stand for it. This aggression will not stand, and I am going to take the kid back to the barber, and I'm going to give him a nice little fade. You know, I'm not going to give him a fade, but I mean, my wife, you know, she's good at a lot of things, but this poor kid looks ridiculous. So.
Well, this beard thing must be very popular, Spencer. I know you might have had one forever, but these young kids, my nephew, my stepkid, like they wear these beards. They have all these beards now, and I'm like, what is with all these young boys and beards?
I couldn't grow a beard for a very, very long time, and then probably about 4 or 5 years ago, I just grew one, and then I learned the hack to keeping it, and then I just kept it ever since. So, so I don't know. I did shave it once. My wife asked me to shave it, but when we were dating, she's like, "I just want to see your face," and then I shaved it, and she's like, "Don't ever do that again." So,
what is this hack that you speak of? This beard hack?
It's trimming it not with an electric razor. It's like, you know, you go to the barber and just do it with scissors, hand cut it, and it maintains the thickness of the beard, right? So just don't use an electric. Use, like, you know, you gotta do it by hand. That keeps it nice and full.
I've been doing it with an electric for 20 years.
Well, that's fine. You don't really have a beard. That's fine. But if you're gonna have a beard and you want to trim it, don't trim it with an electric razor. Trim it by hand. Right?
You guys are funny.
My grandmother hates it when I grow my beard. She says I look dirty. She says I look like a homeless man. Yeah, I know Spanish.
I tell my nephew, like, and my stepson, like, you guys look like you're disheveled.
That's what you and my grandmother would get along great.
Yeah.
I'm like, what is that?
Well, you guys are old school.
All right, guys.
Kimmy, go.
Kimmy runs a live trading room every single day. It's where she's going right now to live trade the open. If you want to be there, get her trades as she's making them. Use the link in the description. I'm putting a link in the chat right now. There it is. It's also on the screen. There it is. Kimmy, have a good one. Go get him.
Bye, guys.
Bye, Kimmy.
Go get him, Kimmy. Go to your room.
What is this getting dressed up? It's somebody's got to tell her it's Chart Summit, not Halloween. You're not changing.
Well, you know, in when we went to Colorado, remember Kimmy was there in Colorado with us in Breckenridge in 19. We dressed like very mountainous. Remember Sean's ridiculous hat? Yeah. Remember Nigerian?
That's
like
right.
Everybody we were dressed like mountain men. Remember?
You're right. Yes, we were. Sean had flannel.
You know, us Flatlanders now, we don't have to worry about such things.
You know, I gotta say, on the last conversation, I prefer a clean shaven JC. I'm with Abuela on this one. Yeah,
my wife does too,
and I prefer a bearded Spencer. I do. You guys
I like how Spencer's got that Abe Lincoln look going. He pulls it off well. You know?
You know what that means.
Yeah, he's got that Abe Lincoln. It's good. It's good. I like it.
Okay. All right. I guess that's a compliment? Question mark? Not quite sure. All right. We'll have Pat Dunawilla from the Chart Report join us in a few minutes. So in the meantime, should we do Hot Corner or Strazza Spotlight? Pick your poison.
Let's do Spotlight, man. There's some stuff to talk about.
Give the man his time. Give him his time.
Spotlight. Yeah.
All right. Strazza Spotlight it is.
Do it.
All right. What a bumper. Gotta love the bumper. Let's start out here on, everybody move my charts down like they don't matter. So I got to find them. Let's start here on the Dow, 14. Now, what did I do here? I marked up these charts in a particular way to paint a bearish picture, right? I could draw these things in a number of different ways, probably each of them. Let's start with the Dow. You have this rising channel that's been in place since late Q1 here. Higher highs, higher lows, higher highs, higher lows. Are we going on to make a lower low? Which would be the first since, like I said, Q1 of this year. This stands out a little bit. Nothing to freak out too much about. A higher low could still be carved out and we can resume. I think Jared just pointed out sometimes you get a trend line break and everything's fine. The trend resumes just at a maybe slower rate of change. See that all the time. So we don't want to overthink a trend line break. We do have these little head and shouldery patterns kind of playing out though. Next chart. S&P 500. This is the level. It's always been the level for me. The August highs, I can't talk enough about these August highs. They're absolutely critical. They come into play right around 430. It's also the 62% retracement of the 2022 drawdown. If that level goes, look out. I have marked up this 410, 415-ish area with the anchored VWAPs from the cycle highs and cycle lows. So that would be the next line of support. If this goes, let's see. For now, it's holding in. We talked a lot about these failed tops. Could this be a failed top? Absolutely. Next chart. NASDAQ 100, also very toppy. Again, you got that trend line break. The trend line break tends to be the first characteristic of a trend reversal, but it doesn't always mean that we're getting a trend reversal. NASDAQ has to take out these pivot lows at 355. If it does, look lower. The next line of support is those August highs again, 335. Next chart. Russell 2000, this is the weakest of them all. I zoomed way in here. We're just looking at this little range that began last summer. You have a little head and shoulders top. JC would say it has to reverse something. There's nothing to reverse here. Regardless, we've broken the 62%. That means to me, we're going back to test those pivot lows. They come in right around 167.50. And I think even the pivot lows from last summer, ultimate cycle lows. So Russell 2000 maybe revisiting the range lows. If you look at microcaps, this is why I think that microcaps are already there, right? So when we're looking for further downside or a continuance of the corrective action, we want to look at the weakest indexes and weakest groups and weakest stocks. We look to the laggards because they will lead to the downside. If microcaps break these pivot lows, which also coincide with those pre-COVID highs from early 2020, look out below. And small caps are definitely revisiting the range lows, maybe even breaking as well. Next chart. This is where things get dicey, right? Let's look at some of these leadership indexes. Here's industrials, right back up, took out those former highs, made new all-time highs this year, undercut them, failed miserably. Now we're getting the trend line break back below the 200-day moving average. This looks a little dicey. First time oversold in a year for industrials. Next chart. Broker dealers, another one of the strongest indexes, can't break through. This is the theme here. The best stocks, the best indexes, the strongest groups cannot break out. They're just strapped with this overhead supply and they're really struggling with it. Next chart. That's not a chart. I think we keep going. Yeah. Tech, right? We could draw these short-term tops all day. I could draw a little trend line break here. Does tech break down below these pivot lows, complete this short-term top? Then what does the follow-through look like? What kind of a leg down do we get? These are the questions we have to be asking. Could this top fail? Absolutely. Next chart. Semis, key component, maybe the largest, second largest subsector of technology, already broke, right? Already completing this short-term top. Look at those momentum divergences. Last time we completed a short-term top like this in the semiconductors index, we went on to draw down 45% over the next 6 to 8 months. I don't think that's going to happen again, but it's important context. Next chart. If this one goes, look out. Again, if the leaders can not only not break out, but start to complete these short-term tops, not good. Next chart. Even software, this is equal weight software. One of, to me, the most important indexes in the world. You got a little bit of completed base here. It looked like the reversal pattern was done and ready to go. Now, short-term top. We don't want to see that.
Hold on.
This would suggest a revisit of the lower bounds.
Hold on there, Baba Louie. So
I am painting a bearish picture. You know what?
Hold on. I think that you did a great job, by the way. This is fantastic. I like how you're bringing up a whole bunch of charts to tell us a very similar story, right? Mm-hmm. Backing that up. And then you said something interesting that I'm going to question you on. This is one of the most important indexes in the world. Yeah. Software. Why?
These are the best stocks. If you talk to growth
software stocks are the best stocks.
They have been since 2015.
Since when?
Since 2014, 2015, when Microsoft started to get its shit.
But they've been the worst stocks for the last couple of years.
Dude, software is critically important. These are the growers. These are the companies that all these growth investors want. Yes, subscription revenue. They grow forever. Very small cost structures, right? They can really scale. These businesses are like the golden goose. This is what everybody wants. So
Yeah.
you seem to ignore the fact that so many people are growth stock investors and so many people are in these names and in these.
Your home country bias is oozing out of you, bro.
Yeah, good.
Oozing.
Because the U.S. has been the place to be. And software
is Adobe one of the most important companies in the world? Adobe?
Let me finish my thing. Next chart.
I don't know. I don't agree with
Home
any
builders.
of this.
Home builders. What about this one? Spooky stuff. Top.
Yeah, I'll give you the home builders are arguably one of the most important indexes in the world, but software?
Everyone owns software.
Who's everyone?
Doesn't own home builders. Dude, come on. Everyone owns software. These are the names.
All your friends in Vietnam, they own software? What about your friends in Chile and Peru? Do they own software too?
Vietnam.
What about in Mexico? These Mexican software companies?
New all-time highs for the Vietnam Technology Index, by the way. Next chart.
I love that. First of all, I love that you know that.
Look at it every day. It is rolling over a little bit over the near term here. This is, I don't want to say the black swan, but this is the big, obvious risk to everybody. Commercial real estate. REITs have been so bad. You can't even describe how bad these stocks have been, particularly in the context of other things like industrials and tech working. REITs have looked terrible for a long time now. Look at this massive top. If you go to the next one, new all-time lows on a relative basis. I don't think you could touch this space with a 10-foot pole right now. I would really stay away from REITs. I think if something breaks, it's probably going to be here. And then let's just wrap this up quickly. Next chart. These are really the spookiest ones. Okay, range breakouts across the curve for U.S. interest rates. Now we're getting confirmation from developed Europe just yesterday with new highs from Germany, France, Spain. Next chart. When you zoom out, you get this range resolution within the context of a major trend reversal that is in place. Look at this, right? Rates have been falling for 40 years. Maybe that's over now. We just got this breakout, new, almost decade-long highs. I don't think it ends there. Next chart, it's not just
Hold on. I think it's funny. By the way, I'm not disagreeing with you at all. I'm just making a funny point that my entire career, people have been calling for the end of this trend.
And it's happening now.
And I'm not saying that you are one of those people or anything like that.
Yeah.
And I'm not necessarily disagreeing with you. You're making a good point here. I just think it's hilarious that I've been hearing this for over 20 years.
This channel was in place for 40 years, JC, right? It is now violated. Is it just going to roll over and end there? I find that hard to believe.
It has every other time that people thought that this was it.
It really looks like it's going right now. And I think this range resolution is great confirmation for that trend reversal. Let's just finish with the dollar quick, because I think this one is even more important. This is a momentum thrust. It speaks to the relentless bid for the dollar. 10, 11 straight up weeks for the US dollar, coming off a pretty nasty drawdown that began last fall. If we zoom out on the dollar, this is occurring at a key level. We have the short-term trend reversal taking out those pivot highs, but also in the context of these key prior cycle highs. Next chart, please. Look at that, right? So I've even marked this up to tell you that a higher dollar is bearish for risk assets. So there's a big level there in the lower 100s. I think we're getting confirmation right now if we are going to make a valid resolution above the pivot highs. I think we're going back to those highs from last year, and that will continue to weigh on stocks and other risk assets. So there's my bearish outlook.
All right, so then I'm gonna play devil's advocate on your end of the world. By the way, everybody on Twitter agrees with you that the world's coming to an end. I'm not saying that you're saying that. You're making the case.
And let me just, right, fair disclosure, right?
Throw slide one up, Spencer.
I'm not saying that I actually feel this way, but if somebody said to me, make your best bear case, these are probably the charts that I would point to. And this is an exercise that is so beneficial to do every now and then. You should make a bull case, make a bear case, play them against each other.
I love this. And folks, if you're out there listening, Strazza is 100% right. If you are leaning long, Strazza just wants to record that and just play it all the time. Strazza's 100% right. If you're leaning long, if you're leaning bullish, if you're positioned bullish, if you're a perma bear, if you're a perma bull, if you're any of those things, do what Strazza just did. By the way, do it every week. Make a list of the bears. And if you're a perma bear or you're positioned negatively for lower stock prices or heavy cash or whatever it is that you're doing, but you're leaning bearish, and do the opposite. Make a list of positive things. Speaking of which, Here's probably the least bearish chart on the planet right now. Probably the most bullish, right? Chart in the world right now. Strazza, is there anything that points more to risk appetite versus risk aversion than this one right here?
Yeah, the bond market is just fine, right? Rates are breaking out, and there is still no stress in the bond market. I think that stress shows up in the equity market.
When you hear these clowns talking about credit events or whatever that even means, the bond market is literally implying the exact opposite of a severe credit event. Am I wrong?
Listen, it always shows up in these high yield spreads, right? When there's trouble, and
is this the first time that it doesn't ever?
No, I think maybe there could be a situation like Jared was just alluding to in the financial crisis, where all of a sudden you wake up one day and you see it, right?
And to his credit, pun intended, I suppose, these credit spreads tend to be more coincident than anything else. So leading or coincident, not lagging, but leading or coincident. And we haven't seen it. To Sam's point, we should have maybe asked Jared about this one.
Yeah, totally.
Yeah.
Listen,
what is it with these Lehman guys and their bonds? These Lehman guys love their fixed income, huh?
I wonder if he knew Larry.
I'm sure they know each other.
Yeah.
I'm sure they know each other. They're both old school. You know, they've both been writing newsletters for a zillion years. They were both at Lehman Brothers. You know, they both write books, right? I feel like they have so much in common.
6 books, though. Truly impressive.
Very aggressive, man. But good for him, dude. Jesus Christ, 6 books. Wow.
It's a lot of writing.
Can't even get through one.
Yeah, it's a lot of writing.
It's a lot of writing. I know. I'm gonna call Morgan Housel for a pep talk. That's what I'm gonna do.
I think I was.
By the way, if you have not read The Psychology of Money, if you have not read that book, get involved. Spencer, have you read it?
Yeah, of course. Fantastic book.
Excuse me.
You know, we talked about books on here yesterday. I didn't get time on recess, but I have like 12 Audible credits, and I just don't have the time. They're always like, hey, you're gonna lose your credits. Any book recommendations, I'm a taker. All right, send them here. Email them, DM them, put them in the chat. I need book ideas. JC, that book about the strikes, History of America and 10 Strikes was terrible. I know I told you to read it. I take it back.
I was never going to read it, by the way.
Okay, good.
Can we do a little hot corner? Because we got some action.
Do we?
Uncle Carl buying utilities. Uncle Carl YOLOing utility stocks.
Old news.
Come on.
Uncle
baby.
Carl. The big news is that Uncle Carl still has money.
That's what I was going to say.
Wow, too soon?
All right.
So hot right now.
All right, so JC wants to talk about Uncle Carl here. We have another purchase. Really, this is a piker purchase for a person like Carl Icahn. $2.27 million. Southwest Gas Holdings, that's SWX. I wouldn't touch this chart.
You can tell that Uncle Carl does not have a technician on his staff. Have you noticed that the types of stocks he buys, and then when Uncle Warren buys, it's, you know, the chart generally looks better. I feel like Warren's got a technician there, and Carl does not.
I would agree. Sure.
Yeah, Sam. Housel has another book coming out next month because he's a G like that, just abusing me all day long. Just they're lapping me. You see how all my friends are lapping me, right? In the book writing.
No, people are asking about you. They're like, "Where is this book from Mr. JC Parets?" I'm like, I don't know.
Don't worry. My publisher's asking about it too. So,
all right. You want to talk about anything else on here, or can I go to some of this options action? I'm just marking up a chart real quick.
Well, I love how you're calling out Uncle Carl for a piker purchase for $3 million.
Well, yeah, it is now. It is now. Stock market, Mike.
You do it to these executives,
or it isn't anymore,
who probably don't have a decimal of the money that Uncle Carl has. He's got to come out here and make it rain. $3 million in a utility that he already owns. This doesn't excite me.
All right, fine. It doesn't excite you. What about El Duderino here, Mr. John Ricolta Jr., dropping $1.7 million on this REIT?
Agree Realty, based in Detroit.
5%.
Based outside Detroit.
What do you think about what I said, guys? I don't think you want to touch real
Look
estate.
at this chart.
Here.
This chart looks terrible.
Why do that to yourself? Why even try to play real estate here? I don't know. It's not for me. Not interested.
Well, clearly, John Ricolta Jr. disagrees with his $1.7 million.
Some people are interested, actually, Strazza. On this week's edition of The Buzz, Pat can talk about this when he comes on. There was a number of REITs on The Buzz this week. So
I think it's irresponsible to get long real estate stocks here.
Don't know what that's about.
And it's also against everything that we've learned about technical analysis and top-down technical analysis.
Seems like the mean reversion crowd would disagree.
I just said top-down technical analysis, right? We follow trends and relative strength. You would literally take real estate, throw them out, and ignore all of the individual components in the real estate sector.
Well,
Would you not?
Your average investor is not invested in real estate, so in commercial real estate. So
here we go. Chart 1. This does excite me from the hot list today. So this is C Limited, shout out Southeast Asia. Think of this as a Shopify or an Amazon for those countries. It's been terrible. It was a big runner, 2020, 2021, big IPO. People were excited about this name. It is a huge brand out there. Everyone uses it. This thing's going to scoop and score. I want to be along for the ride. I initially was watching this as I thought a base was forming. We had those August highs. We had those year-to-date highs up around 90. And I was thinking, this is the breakout level. I want to get involved. Instead, we revisited the lower bounds of the range, undercut those lows from last fall. And now we're scooping and scoring, ripping higher. And I think we fill this gap. You could trade this thing here, 40 to 55. That's not bad. And it probably happens pretty quickly.
Two things here to think about. Number one, the level to be long above is 40, 41?
Yeah.
For a gap fill towards the mid 50s.
40. Yeah, it's 40 right here. 40.
Also, as investors, if we're going to be in this, understand that we have the risk of another gap lower because this is a severe downtrend.
40, 50, 40, 50. Yeah. Oh, totally. This is a trade. But I have a feeling it might be a good one. This
is based in Singapore.
Yeah. But because that's the hub, right? We've talked about this.
We talked about this.
Singapore is where these companies organize to service the surrounding area.
All right, let's go through the futures right now. Dow down 140 points. S&P futures still down 60 basis points. Same with the NASDAQ. Bond futures 30 years still up 20 bips. And gold, silver, and copper all down. Copper now flat though. Gold and silver still down 60 bips. Crude oil in the green.
That's the only thing. It's the only thing I got in the green. Crude in a couple.
Euro is also in the green. So is the volatility index.
Yeah, crude in a couple sectors.
Yep. So, again, speaking of the average investor and me not really too worried about them, the way I look at the average investor and try to use that to my advantage is that we want to think about what that pain trade looks like. And I think the lack of exposure in index investors in energy is part of that catalyst. So when it comes to sentiment, we do care what the average investor is doing. It's just on a one-on-one basis, we don't care. And the average investor, if they own the S&P 500, 4% of that is energy. And if they own the NASDAQ 100, 0% of that is energy. So I think that unwind that we've been seeing over the last several years back into energy, we've gone from what, Strazza? 2% of the S&P 500 to 4? Are we even at 5 yet? Like, this is just getting going.
Maybe. All right, let's bring on Pat. Talk about the chart report. He's here right now. And here he is.
Patty.
How you doing?
That's the morning of Chart Summit. Feeling good.
That's right.
Very excited.
You guys ready?
No.
Listen, we're always not ready. We're always ready.
It's always
it's always, Listen, we have a good time. Were we ready in Colorado a few years ago? How'd that turn out? That turned out pretty good. I might say. By the way, remember when we did Chart Summit? We did it for charity in 2020.
Of course, that was great.
So in 2020,
that one was great because everyone was at home. No one had anything to do. And
JC put that conference together in a weekend.
I put it together in a weekend. To be fair, the technology had already really been built because we had ran it the last couple of years. And, we were killing it. We were making so much money. Our friends were making so much money. I mean, I was on the phone with all my friends. We're having record quarters, record years. Everybody was killing it. Meanwhile, people were dying. The world's falling apart. So we felt guilty. We felt like we were doing something wrong. Like something was going on there. So we're like, let's do something. So we put the Chart Summit together. We raised over $250,000 for a series of charities within 48 hours, which was pretty special. Wow. So I'm proud of that.
That was like the bottom too. Like that was probably a couple days away. And I remember Dietrich made some great points, and also Gina Martin Adams. I remember she had said, because everyone was bearish at the time, but she had said, we've never seen monetary policy react so quickly to a crisis. And that was it. That ended up being the thing that got us out. So definitely some great calls on there last year.
Greatest 52-week period in the history of the stock market after that.
Is that right?
Oh yeah.
Wow.
Yep.
Pat, are you writing about these real estate stocks? Really?
You know what? So they showed up, and I'm glad you guys brought them up because, you guys are all right. I mean, yeah, they're trending. I think there's a lot of people that are looking to that area, looking to bottom fish, but man, those charts are just giving you no reason to buy them. I mean, from a contrarian perspective, sentiment-wise, it's there, right? But structurally, there's nothing to like about these things.
It's important to point out that being contrarian, by definition, doesn't work most of the time.
Right. The crowd is right for the majority of the trend.
Arun has a great quote. It's part of being a contrarian is knowing when to be consensus, knowing when to go with the crowd and the trend. And that's, that takes some experience.
This is just not a space I want to be involved in right now. I read your top 10 report this week. You covered, I think it was XLRE.
Yeah.
That chart couldn't look worse.
And you could see the reaction to that gap higher. You pointed out it was a breakaway gap in yields on Thursday.
Yeah.
And you saw that reaction in real estate. It gapped lower and didn't even recover at all. I mean, here we are pushing new lows. So
it's important to remember that these real estate investment trusts and real estate investment companies they're in the financing business, right? So the same way that these spreads are impacting the bank and the whole, interest rate environment are impacting banks, REITs have similar problems to deal with, and they'll blow up too. So we'll see.
You guys were talking earlier about the psychology of the masses and what people do, and I think a lot of people just can't help. They see a chart go down, and they think they're getting a bargain, and they think they're getting something on sale, and they can't help themselves. Right? Oh, yeah. It's 50% cheaper than it was last year. Look, sounds like a deal to me, right?
I mean, what is the first thing you learn about investing? Is buy low, sell high, right? And if you don't understand trends, then that just won't work, right? You think you're doing the right thing. You think you're buying low, looking for bargains, all that. Yeah.
That's the beauty of it. And there's the arb, is that investors think that that's the way the market works, where you buy low and sell high, when that's just not the case at all. You want to buy high and sell higher. That's how the markets work, right?
Yeah, I think the default human psychology is to look for bargains. That's that's our default nature, and people assume, we always say the market generally goes up, right? At the index level, that's true. There is this assumption that all stocks have to always go up eventually, and that's definitely not the case, right? It's the opposite. So, I don't know. People just can't help themselves.
What are people talking about?
Oh man,
is bringing up
a lot of this head and shoulders stuff. In number of things. S&P mostly, but you have one in the Russell 2000. That one already resolved lower, and that one looks like we could be heading down to the lower end of the range there for the Russell. But also in the S&P too. Is it really a head and shoulders? Is it going to fail? What does that mean? I don't want to make too many bold predictions. We'll see, but better than anyone else. Those pattern failures can lead to some pretty spectacular moves to the upside. So that would be definitely one to watch for, but it could just be a classic head and shoulders. So that is what the jury's out on, I think.
Throw up chart 3 for Patrick. Why do these look so similar, Pat? What's going on here?
Let's see. What are we looking at?
We're looking at UBS and Mitsubishi.
So you brought this one up on Chart Request Live last week. I do not know why they look so similar, but is MUFG, is that the largest Japanese bank?
It might be the second.
I think
Okay.
And UBS is the largest European bank.
I
probably now, right?
Yeah, now it is.
Got to imagine their yields look similar too, as far as their countries.
It's HSBC.
They both operate and service developed ex-US markets, right? That's as similar. That's the biggest similarity that these two companies have. One operates out of Japan, the other one out of Europe. But boy, oh boy, we see these chart patterns mimic each other all the time. This is a monster base, like a decade and a half long base. UBS has already left the station. I know that you like MUFG, and when you brought that chart up, I was just like, wait, this looks like another one. No. So I would imagine
I like is SMFG. Little different, but it's also one of the largest Japanese banks.
Yeah, so international banks doing okay. U.S. banks, not so much.
Depends on which bank, right?
No, all of them. They all stink.
All right. I think that there's some surprising strength in some of these banks. No,
it's a risk that I don't need in my portfolio.
How come JP Morgan doesn't look worse? JP Morgan does not look terrible.
JP Morgan is always the exception.
I don't want it. I don't want it. Yeah, because
JP Morgan the most important bank though?
Yeah.
On earth?
In the world, yeah.
Oh yeah. Oh yeah.
It's not Credit Suisse. It's not First Republic.
It's neck and neck, but I think
JP Morgan Chase.
No, it's First Republic.
You want to throw up? Actually, I'll do it for recess. I want to talk about those AV WAPs in the banks.
Oh, wait, Pat, was there anything on the chart report that caught your eye?
Really just, you know what? I will say this TD combo on IWM, I thought that was kind of interesting. Peter Pinkosov, I think is how you pronounce his last name. He's a big Tom DeMark guy, and I'm not a huge DeMark guy, but when he's pointing something out on it, I tend to listen to him. So that's kind of interesting. I mean, we were talking maybe Russell going down to the lower end of the range, but maybe it's a buy here. Who knows? Maybe it's reaching exhaustion.
All right. Guys, get the chart report. It's free. Pat puts it out every single Monday through Friday. The link is in the description. We'll bring it up on the screen right now as well. There it is. It's a QR code, and then we'll bring the link up on the bottom, and you can get that. It's just, chartreport.com, and sign up for that there. Get the chart report. It's fantastic. You don't have to spend all day on Twitter because Pat does it for you.
Patrick, and come watch Patrick's presentation. When are you presenting, Pat?
Absolutely. So tomorrow, I believe I'm slated for 2:00.
Yeah, baby. Yeah, the 2:05. Yep. Pat will be there. Man, we had maybe we should bring up the schedule.
Yeah, bring up the schedule. Yeah,
that would be great.
We got some good stuff.
It'd be great if we could do some schedules on here every now and then.
The schedule's right on chartsummit.com. All you have to do is look.
We need a show schedule. We need a Chart Summit schedule. We need a daily programming that's like blocks. Shows you when is what time and what guests are there.
All right. I had to zoom in a little bit. Can you see that?
Yeah, I mean, the bar is pretty high for this year's Chart Summit. The last two were pretty good.
All right. So where am I? Okay. So I'm 6:00 today. That's what I'll be doing this afternoon is getting all the best breadth charts together. And then
wait,
okay, I'm on tomorrow morning. Great. Can't wait for Mr. Phil Pearlman. And I'm doing the Brian Shannon too at 5. So I'm on at 5 and 6 today.
Wow.
Yep.
Somebody's who's big time? Who's big time, huh?
Anyway,
What?
this list is available on chartsummit.com, guys. This is the full agenda for the next day, today and tomorrow. If you haven't signed up, do so, and then we will be sending out the watch. We haven't sent out the actual links to watch yet because we don't want people to share it ahead of time. So we'll send it out a little bit before later on in the afternoon before today's stream goes live.
So many fan favorites.
Bart,
bringing Bart back. We get requests for Bart constantly. Kenny Glick in the
we got
house.
Bart on?
Yeah, we got Bart. Bart specifically said, "Can I do something out of left field?" And I was like,
"Oh boy, if Bart's
Sure.
saying out of left field, this should be
sure."
interesting.
Yeah, take your gummies before Bart comes on.
Hey, JC, that's some esteemed panel you're going to be on at 6:00 today. Between me, Andrew, and Mike Hurley, 3 Dow Awards. So quite the company for you.
All right. Yes. Obviously, we don't expect everybody to be able to put their lives on hold and watch the whole event live. So if you register, you will get the recording after the fact. Yes, it's not live or you miss it. We will be sending it out after the fact. So if you can't catch it live,
if we press the record button.
Yeah, we'll press the record. We'll press the record button. So yeah, we will be sending it out after the fact. So you don't have to catch it live. You can catch it later on or at your leisure.
And so then after the chart summit, just to get through the end of this week, JC, you're not going to be joining me Thursday and Friday. I'm going to miss you.
I will not. I am going to. I'm going to Boston. Why don't you hit the recess and I'll talk about it.
Yeah, let's talk about Boston.
Let's talk about Boston. JC's shipping up there.
That was a song.
Boston.
Yeah, all right.
So Mr. Spencer Israel, I'm going to Boston. Ready? This is the note that I get from my sister yesterday. So I went to Catholic school from the age of 4 until 22, believe it or not. So I get this from my sister yesterday. You ready? You'll be proud. So, and I quote, JC, you and Jamie are my godparents, aka Kavitcherin and Qatar. Not sure.
Can you say it again? Sorry.
We're the unofficial godparents, which is KVATERIN and KVATER.
I'll be honest. I thought Jews didn't do godparents.
These right.
These
so
Jews.
This is what I'm named. Then the rabbi will prompt me to do what I need to do during the ceremony. And then my wife is going to read something in English, not in Hebrew, apparently. And also, this is a very special day. And then my niece is going to be wearing a talit. This is a blanket of sorts that was worn at her husband's bar mitzvah many years ago.
Okay. Yeah. That's
How about that?
Yeah,
Sounds
that's cool. It sounds nice. Yeah, a tallis is just a shawl you wear over your shoulders, and
I'm learning. I love it. I love all. I mean, I live like a Jewish man. I have so many Jewish. I converted
What
when
does
I hit
that
Wall
mean?
Street. Well, when you go to Catholic school from 4 to 22, not in New York, and then you move to New York and start working on Wall Street,
Yeah.
it's like this whole nother planet opens up.
Yeah.
Right. So I converted to Judaism when I was 22 years old, not knowing at the time, but in hindsight, clearly. But I'm this is a beautiful ceremony that I get to be a part of. I only went to one bar mitzvah my entire life, by the way.
I went to a lot of bar mitzvahs.
Well, you grew up in Connecticut, in Greenwich. I mean, there's a lot of big Jewish population there.
Yeah. All right. Yeah, I'm proud of you, JP.
Lawyer from Curb. Okay.
All right. My recess is an update on my arbitrage Taylor Swift trade from yesterday. So far, it's not working. It's going.
Did you do it though? Did you do it?
No, because I was watching like a hawk all day to see if I should do it. Prices are actually going down for the game on Sunday, so not up. Wrong direction.
Who do they play?
The Chiefs. That's the whole point.
Yeah, the Chiefs. Yeah, they're gonna get smoked.
Yeah, Taylor Swift. Come on.
Right.
Can I just talk about some of the things that I'm excited about into the end of the week?
Yeah.
So Thursday, after the chart summit, it does not end. Do not miss the morning show just because JC won't be here. Special guest Jeff Hirsch is coming on. He just did a brand new research project. I would say maybe this is the first seminal piece of research about Bitcoin seasonals. So I can't wait. The interview is going to be all about that. So we're actually moving crypto Friday up to Thursday a little bit this week. And then a really, really special interview for me personally, which I can't wait for. We're going to ask Meb Faber some great questions. We're going to have an awesome discussion.
Meb's going to be here Friday?
Meb's going to be here Friday.
You. Is that okay that you're going to miss it? Should we reschedule him?
It's fine. You're a fanboy. You can have it.
So it's going to be a great interview. Meb was one of my absolute favorites, role model in the space. When I was coming up 10, 15 years ago, I read everything that Meb Faber did. So I cannot wait for this. And then we're going to top off the week with the Ryder Cup on Friday into Saturday and Sunday. It's one of my favorite sporting events of the year. Actually, it's only every 2 years. It's literally the Olympics of golf. I cannot wait.
Where is it?
Go USA. I think it's in the US this year. I'm not sure. It's in US, then Europe, US, then Europe. I have no idea.
And what is it? It's U.S. against the rest of the world?
You get the best golfers from the United States and then the best golfers from Europe, and they play against each other in like all these different.
But if you're from South Africa or Australia, you can't play?
Nope. Dude, golf.
No, I'm asking. I don't know. This is the U.S. versus Europe.
They do something in the off year that nobody cares about.
It's so exclusionary. There's so many good. There's good golfers. Louis Oosthuizen is from South Africa. There's great golfers.
They do something that's like U.S. versus rest of the world off year. But Brooks Koepka, who's really like the best player in the United States, was playing a tournament for Live Golf just yesterday or Sunday. And, I would think he should be resting and getting ready for the Ryder Cup. So we'll see.
Ryan says that the non-Europeans play on the Europe team.
Do they include them, though?
You're the golf expert. I don't know.
Yeah, you're asking us.
Here's the thing.
I'm gonna sit out, turn the TV on, and watch golf. Come on.
Oh, it's so good, especially like for background. You can sit there and write and do your work. You got the golf on. It's really
good for napping. If you want to get a good nap in,
is just a special thing. Yeah.
All right, Pat. You got anything for recess?
For recess, oh man, not too much. Just looking to get through this week, and we got Syracuse Clemson on Saturday.
Oh wow, that's gonna be a doozy. That's gonna be
yeah, it's gonna be brutal. But oddly enough, Syracuse like sometimes shows up against Clemson. It's really weird. Like they've actually beaten them a couple times, and then the rest of the season's complete shit. But
the orange team will win that game. All right, that'll be.
I want to go to the Carrier Dome, Pat. Can you take me?
Should you like it?
I know. I gotta go.
It'll be good.
All right, that'll be a wrap for us today. Thanks to our guest, Jared Dillian. Thanks to Kimmy. Thanks to Pat. Thanks to all of you in the chat. Hey, hit that thumbs up. We got 39 likes on YouTube. Let's get to, 60 in the next 10 seconds. Don't forget, Chart Summit starts today, 4:30 p.m. Eastern Time. Before that, though, we have Chart Request Live. That'll be at 1 o'clock, as it is always, with JC and myself. Twitter Spaces at 11 o'clock today on Pat's Twitter, the Chart Report.
We'll do our best not to screw it up this time.
Do our best.
No, but seriously, so it's a new time, everybody. Twitter Space is no longer at 11:30 every Tuesday. It's 11 o'clock, and we're doing a new thing here where we're not going to mess up the technology anymore. No more technical difficulties, I promise.
All right, that's a wrap. Everyone, go make some money, all right?
Adios.
See you later. Have a good one.